Okay, so now we're going to compare balance sheets to income statements. In a previous lesson, we did balance sheets where you balanced your assets, your equities, and your liabilities. So remember, assets are anything that you own, anything that's in your possession that you own. Liabilities are anything that you owe. Okay, so maybe taxes, or maybe you're still paying on the building that you have. The difference there is your equity. Okay. So let's take a look at this question. A company has $32,000 in cash, $64,300 in merchandise, and $84,000 owed. What is the company's owner equity? Well, cash on hand is an asset as well as merchandise that you own. So our total assets, we need to total those first. So for assets, we need to put together those two values of 32,000 and 64,300. Okay, so in assets I have $96,300. To find owner equity, I have to take the assets minus the liabilities. The liabilities, again, are things you owe. So this $84,000 is a liability. So to find my owner's equity, I'm going to take my assets of $96,300 and subtract from that the liabilities of $84,000, and I will have my answer. Okay, so my owner's equity comes out to be $12,300. And again, it's assets minus liabilities that gives you owner equity. Okay, this is a question about income statements. Okay, so it says they prepare monthly income statements, and the past month it collected $22,142. It had $1,300 in refunds. Operating expenses were $4,650, and then for training and computers $432. Other expenses $62. Right? What is the net income for the month? So we have to start up here at the top. They brought in $22,142 but had $1,300 in returns. So this is called our net sales. It's what we sold minus anything that was returned. So our net sales, we're going to take the $22,142 minus the $1,300 that were refunds, the stuff that came back. Okay, we get $20,842. Again, normally we would find the gross profit by doing our net sales minus our cost of goods sold. But they're not selling a good, really. They're a training company, so they're really selling a service instead. Okay, so for our gross profit, we didn't have cost of goods sold, so we're just at $20,842. The next thing we need to figure out is what were our operating expenses, because to find the net income, we have to subtract that from our current total. So operating expenses include $4,650 for salaries, $432 for supplies, and $62 for other expenses. So let's total those. Okay, so we are going to add together the $4,650, the $432, and the $62, and that will be our operating expenses. Okay, so we have total expenses of $5,144, and now we can go ahead and find our net income. The net income is your gross profit minus your operating expenses. So we're going to take our $20,842 and we're going to subtract from that the $5,144. Okay, so again, $20,842 minus $5,144. and we get $15,698. That would be our net income, our income minus our expenses. Okay, this is a review of the last lesson. Also, the current ratio is the ratio of your assets to liabilities. You want to keep that number above 1 so that you know that you're bringing in more than you owe. Okay, it says assignment services has cash on hand of $7,320 and equipment worth $10,340. It owes the bank $9,000. What is the current ratio to the nearest tenth? So again, we're going to take total assets divided by total liabilities. So we need to go ahead and total the assets because they gave it to us in 2 different chunks, in our cash on hand and in our equipment. So again, what we're doing here is going to total our assets. So we're going to add 7,320 to 10,340. When we do, we get $17,660. There's our total assets. Okay, now we are going to go ahead and find our current ratio. We take our total assets, again, which we just found was 17,660, and we divide it by our total liabilities. The only liability they mentioned was owing the bank $9,000. Okay, so we go ahead and divide those 17,660 divided by 9,000. We get 1.962, and 2 goes on forever. Now this wanted it rounded to the nearest tenth. Tenths is 1 place after the decimal, so we want to go 1 place after and stop. So that would be here as our stopping place. But when you're rounding, you look at that next number. If it's 5 or bigger, you round up, and 6 is bigger than 5. So we round our 9 up. That would bring it up to 10 and would knock this up from 1.9 would round up to 2.0. All right, last month, here's that sunglasses kiosk. Their sales were $8,645, and they returned $220 in returns. So then it has the cost of goods sold. It gives operating expenses, but notice what they're asking here. It says, what are the net sales? Okay, so we don't need to go clear to the end of this one and find our net income. All they want is the net sales. Well, net sales are your total sales minus any returns that come back. So we're going to take the $8,645 minus the $220 of merchandise that were returned. When we do that, we get $8,425. Okay, so be careful and read carefully because this time they just wanted net sales. They did not want net income.